Chelsea have breached UEFA limits on financial losses, according to a report. The Blues posted a net profit of almost £130 million in their latest accounts published on Monday, after selling their women's team to the West London club's sister company. A statement on the Blues website did not specify for how much the women's team was sold to Blue Co., the holding company used in Todd Boehly and Clearlake Capital's takeover 3 years ago, but said profit on disposal of subsidiaries was £198.7 million. According to The Times, the move helped Chelsea avoid breaking the Premier League's profit and sustainability rules last season, as the team continued to spend over £1 billion on transfers to acquire a glut of new players since Boehly and Clearlake Capital arrived in May 2022. However, The Times claims that UEFA rejected the loophole, meaning the Blues have overspent and will now face consequences. The Blues are reportedly currently in negotiations with UEFA over a financial penalty and having to adhere to a spending plan for the next 3 seasons. If the Blues break the regulations once more, it is indicated that the plan might involve a ban from Europe. In UEFA competitions, the rules are different. For example, teams are not permitted to disclose income from selling assets to sibling businesses, as Chelsea has done multiple times. In addition to selling their women's squad to sister business Blue 22 Midco Ltd for £200 million, they also reported £76.5 million in revenue in June 2023 from the sale of 2 hotels to another sister company. Chelsea's loss, without the third-party transactions, was reported at £358 million. Clubs are permitted to lose £170 million over 3 years. The scale of the breach, however, is not known, as deductions can be made for spending on youth and women's teams and infrastructure. Owners Boehly and Clearlake are reported to be relaxed about the situation and are keen to maintain good relations with UEFA. It is believed that at least 3 other clubs are also in breach of the rules, with Chelsea's report to be published in mid-May. The Premier League's 20 clubs, meanwhile, opted not to close a loophole allowing teams to generate income by selling assets to sister companies. The sale of club-owned assets to a related company is allowed under Premier League rules, but must be for fair market value. A move to bring in an outright ban on such sales was narrowly voted down at the league's annual general meeting last June. The club announced last Monday that revenue fell to £468.5 million for the year ending June 30, 2024, due to their absence from the Men's Champions League.